or good afternoon, wherever you are in the world, or good evening. Sam Seiden here. Had a little trouble logging in, but I think we're good now. So if you can hear me and you can see the screen, we'll get started. Today's topic, I want to go over something very, very, very important. So first of all, if you're new to FX Street or new to the webinars that I put on for FX Street, there are plenty of archived recordings that you can listen to that will take a deeper dive into the basics of the core strategy that we go over here in these sessions. Today we're going to go over that again. We'll certainly spend most of our time on the live market, but I want to make sure and go over something very important here today. So the topic is how to properly trade breakouts. Obviously, one of the most popular entry or trading styles or strategies in the FX market are trading breakouts, right? When price breaks above our resistance level or below a support level and all that. So I want to tie breakout into, the whole supply demand strategy that we go over. And again, when we're talking about supply and demand, we're talking about identifying, where significant buying and selling is going on, or more specifically, where are banks and institutions, big money, willing buyers and willing sellers, not where did they buy and sell, where are they going to buy and sell? Where's the smart money, where does the smart money have limit buy orders? Where does the smart money have limit sell orders? That's the key. So the strategy quantifies supply and demand, obviously, in any markets. That allows us to identify price levels where supply and demand is out of balance in a big way. And that is the key to low risk, high reward, and high probability trading. Because that, price levels, always turn at levels where supply and demand are out of balance. So if you can identify price levels where you have a major supply and demand imbalance, right, that's the key to identifying market turns and market moves in advance with a very high degree of accuracy. So that's what we're doing here. We're going to tie that to breakouts today, and I want to add something to this. So I look at some of the people with us here today, and there's a great group. I see some familiar faces. I'm trying to find someone who I know has been here for quite a long time. Boyke, you're a name that pops up. How you doing? Good to see you. Happy New Year and all that. So and the reason I'm mentioning this is because I'm going to go over something today. It's a little nuance that is so key in identifying key levels. And the reason I bring up Boyke and some others is because I don't think I've ever gone over this at FX Street, and it kind of hit me this morning. I don't think I've ever mentioned that at FX Street, but it's such a critical component to identifying the right levels. So I want to go over that, and Boyke, you let me know if I've gone over this before when we're done at the end of today. Thanks. Okay. So take a look at the screen. We're going to look at 3 screenshots here, and then we're going to go into the live markets. So this is, I just pulled up some, this what you see on the left here is the supply-demand grids. We put this together every day for our traders and students. Let's take a look at 3 of these, and then we'll move on pretty quick. So here, prices were trading sideways. Okay, there was a drop in price, and then prior to price returning to that level, we had that supply level here for the S&P when prices came back here, but how did I know that prices were going to decline from this level? How did I know that prices were going to break out to the downside? After all, that's what they're doing there, right? How did I know that initial breakdown or breakout was going to happen? The answer is, I didn't. Okay, and there are ways that we can determine when that's going to happen, and that's what this is going to lead to. But the reality is, I didn't. Okay. In fact, I can say with certainty that I absolutely didn't know with 100% certainty that prices were going to break down from this level. There's one thing we can look at and get pretty good idea that might happen, but with certainty, no. I didn't know that was going to happen, and nobody does. Okay. So take a look at this level here. Prices are basing sideways, and all of a sudden, there's a huge rally in price from this level. Okay, look at the breakout to the upside from this level. How did I know that was going to happen? Right? Again, I didn't. Okay. Not only did I not know that prices were going to break out here at the origin of this move, but I don't even care to know that. I'm not looking to figure that out. I'm not looking for that information. Okay. Let me tell you a quick little story. So, if you know I live in Chicago. I was born and raised in Chicago, and if you're familiar with the University of Chicago, most people consider it a pretty good school, and lots of a number of Nobel Prize winners there, economics, and there's one professor there. I'm not going to mention his name. I'm sure a number of you will know who he is. Anyway, he and I started conversing on this a little bit. I actually went down there and met with him for a little while, right? And we were talking about all this, the whole supply-demand strategy. And he kept, he liked the strategy and all that, but he kept asking these same questions over and over in different ways. And what I realized, and he's a Nobel Prize winner, and what I realized was, I said, obviously he's won a Nobel Prize. I haven't won a Nobel Prize or anything like that. And he's a professor at the University of Chicago. I'm not a professor at the University of Chicago. But in my mind, it just came to myself, you know what? He doesn't get it. He's asking a question. He's looking for an answer to a question that he shouldn't be asking. That doesn't matter. It's not the point. It's not the focus. Kept saying, and again, I'm not talking negative about him or anything. It's the whole point of kept focusing on this predictive analysis. In other words, looking at this, how did you know that was going to happen? What told you that was going to happen? And I kept saying, well, nothing. I didn't know that was going to happen, but that's not the point. You'd ask it in another way. How did you know price was going to do this? I said, I didn't, but that's not the point. It doesn't matter. I don't care that this happens. Everybody out there is so focused on predicting this, okay, that they don't see the very simple strategy that's right before them. So let's dive in a little bit. Instead of trying to predict that this breakout is going to happen, we're not trying to predict this move, and we're not trying to make money when prices break out like this. Okay. Instead of that, we let this happen. Prices may break down from this level. They may break up from this level. Here they broke to the upside. We let this happen. Okay. And when it does, that gives us all the information we need. Okay. It gives us all the information we need, meaning if you really think about the core, the only thing that causes prices to turn in markets and move in markets is when supply and demand is out of balance. A larger number of willing demand than supply right here, okay, price is eventually going to move higher. Once that last sell order is filled, you have a significant amount of demand or willing buyers left over. Price has only one way to go, and it's up. So we let that happen, and once this happens, that gives us this information, that you have a large amount of unfilled buy orders still sitting here. There were a lot more people that wanted to buy here than could buy. It's not even people. It's willing demand, right? Okay. So, again, once that happens, back to core strategy, we wrap two lines around that level, let that breakout happen. So then when price comes back to the level like it did here on the Fed day, this is a great trade for us here on this day. When it comes back to this level, we know two things to be true. Okay? Let's only focus on things, objective information. Number one, we know that whoever is selling on this decline in price is selling after a decline in price, right? Whoever is selling right here at this level is selling after a decline in price. Okay? You can't do that consistently in any market and be successful taking that action, right? You can't consistently sell after prices drop and be profitable. It's not possible, right? Number two, they're selling at a price level where the breakout information here told us that demand exceeded supply. All right? So the seller here, again, is selling after a big decline in price and into a price level where the chart already told us demand exceeded supply. So instead of taking the initial breakout and trying to buy while price is shooting higher like this, meaning you're going to be getting a bad fill, it's high risk, big stop, all that stuff, let prices come back to the level, and that's the appropriate entry for the breakout trade. Okay. I'm going to take this one step further in just a little bit when we get to the live charts, but I think you're starting to get the point, hopefully. Let's go to one more here, and this one's going to be really important. So here I'm going to add something that I really haven't talked about at online trading at FX Street, I don't think. So here's a trade we took. Okay, this is just a short-term income trade. Made a few $100 on it. Not a big deal. Anyway, supply level. Again, notice the breakdown here. We don't try to predict this breakdown. We don't try to short this breakdown. We don't try to make money when prices drop here. Okay. Instead, okay, we let this happen because, again, it gives us all the information we need about the supply and demand equation at the level. Now, remember, it's easy to look at this one and the last two and say, well, if you just would have got in on the breakout, you would have made money at some point because price just kept going. In those cases, true. But if you look at this one, which is like a lot of them, if you would have shorted on this big red candle, well, you probably would have shorted here too, right? And you would have lost money because prices came right back against you. So again, I would say don't do that. There's no point, right? So, but what I want to add in this one is this. So again, same thing, just reverse here. We short on the first pullback to the level and then take our profits at the nearest area of demand below. Okay. But here's what I want to add. That's pretty cool. You can write Arabic in the chat. I didn't know you can do that. I'm assuming that's Arabic. But, or some form of Arabic. Arabic's always a language I wanted to learn, but everyone tells me it's too difficult. Anyway, and it's the Arabs that tell me it's too difficult, so I don't know. All right. So, take a look at this. So now I want to get into something that we really haven't gone over. So now, how do you determine a good supply and demand level versus one that you shouldn't take? Well, we go over this list, and I think you can see this now. Let me know if you can see this. I just pulled up the list of a list of odds enhancers that we go over. Okay, can you see that list? I'm pretty good with the platform we're using here, but sometimes I don't know what you're looking at. Okay, great. So we go over, the structure of a level and then the location of that level on the supply and demand curve. We have a simple scoring system that we use here. And I'll explain more of that, another time. But one thing that I want to point out that is so key, right? So key to all this. Yeah, we'll go over that another time. Don't worry about the list, but is this. A supply or demand level, right? Well, let me explain it this way. Notice where this all starts. So look over here on the left of the chart. We've got some demand here, right? Our base and our rally. Here's the first pullback. Here's the second pullback. And then on the third pullback, price just bases and then goes through the level. Does everybody see that this supply level is the one that takes out this demand level? Does everybody see that? I want to make sure that you're very clear on that. Okay, good. Now let me explain in detail what's happening, and then I'll make kind of my very important point. A demand or supply level is simply think of it as a stack of unfilled buyer-sell orders. That's exactly what it is. Okay, it's an area where supply and demand are out of balance. So when prices shoot up from this level, there are buy orders left over here that were not filled. When price comes back to this level, some of those orders are filled. When price comes back to this level again, obviously goes deeper, which it should. More of those orders are filled. And when price comes back again here, notice we don't rally anymore. Instead, we're basing sideways. Why? Because now the supply-demand equation at this level is flipping. It's about to flip. Okay? Instead of demand exceeding supply, now it goes from being out of balance on the demand side to then equal to then now supply exceeds demand. Now there's more sell orders than buy orders at this level. Does that make sense? That's exactly what this picture is telling you. Okay. So supply levels, right? The supply levels that break through the demand levels are the supply levels you want to take. The demand levels that break through the supply levels eventually are the demand levels you want to take. Okay. That may not sound like a big point, but believe me, it's an enormous point. It's a filter that will cut out, a lot of your, if you're not focused on what I just said, this filter should cut out many of your levels that don't work and keep the levels that do. All right. And that's why I like this example so much, because it's just so clear. I can replace these candles with actual orders and make it even more simple for you, but I think you get it. I see some questions here. Which time frame do you go your levels at? Any time frame. It doesn't matter. So you don't just want to focus on, all right, let me, so Santosh, I see your question there. Can you repeat it, please? Let me repeat it a different way. You see this area up here at 332? We could look at that and say that's a supply level, right? But this supply, while this structure might look great, and in fact may even look better than this one, the difference is this supply level it's just a supply level sitting there, where this one is the one that takes out that original area of demand. This one up here did not. It's a very big point and a very important filter. Okay. I will say I'm pretty sure it's the next webinar we do. I am going to be able to. We're going to do a special webinar where we're going to be able to deliver a full online kind of class to you and where we'll go deep into all this stuff. We've never done that before, but we're getting very close to being able to do that. So we'll get to the details in that class. Don't worry about that. So it's taking a little time because I want to make sure I can offer it to you for free. So I'm getting there, and we're actually just about there. Anyway, so make sure you understand that point, and let's go into the live markets now and look for some opportunities. No volume confirmation needed, Mohammed. Daniel, no, that one. Let me just go back there for a second. No, I had to draw the upper line up here because that was where the highest price in the base was. Okay. Yeah, Mark, exactly. It's a big filter. All right, let's keep going. Let's see. Merjan, great. Hopefully that's working out for you. Excellent. Okay. Okay, let's move on to the live markets. And one thing I want to do too before let me just do this real quick. So I just let's see here. I just put my email address into the chat. Whoops. I was behind on the chat. Sorry about that. I just put my email address in the chat. We're not done yet, but I always forget to do that at the end, and everyone's always gone, and I get questions about it. So here's my email address, just so you have it if you need it. Let's see. Okay. All right, so let's move on here. Oh, let's show you this. Okay, so give me a second here. I just want to log into, let me go to the website real quick. And I want to log in here to, this will just take a second, to the grid. And let's go to the student lobby. Justin, yeah, absolutely. It's, you know, I started trading FX markets, and I would say there's one market where it's just, you know, really outstanding. It works the same in any market, but yeah, FX is fantastic. Okay? Especially since it's the market where, you know, the Fed and central banks are printing money. You know, it's even that much better because we really have to keep up with what is the real supply and demand equation at different price points in the FX market. Yeah, absolutely. Okay. So let's go to yesterday's, there's the grid for today. Let's go to yesterday's. And I want to go over a few of these. So a number of these levels met entry yesterday. There's some FX markets in there. Let's talk about, we can go over the S&P or NASDAQ. Let's go over the NASDAQ right here. So notice yesterday we had a level of 3570.50 to 3577.50 in the NASDAQ. Yeah, Nick, when I trade the FX markets, I trade probably more futures than anything else. So, yeah, absolutely. Absolutely. Okay, so here's the NASDAQ, and here's that level from, just ignore this 100%. That's a kind of a trade station thing. I'd have to reboot my computer to get rid of it. So here's that level from the grid. Okay. Again, notice price is basing sideways, and then a big drop from that area. Okay? So if we go to our odds enhancers, right? Not too much trading there. Strong drop in price away from the level. But when I bring this to a 60-minute chart, I want to show you something. Notice for a number of days, notice all this over here? See all this? Okay. See this basing, a little bit of a rally, basing, you know, rallies. This whole thing here, and then notice when price comes back into these areas. There's demand, right? Price rallies up. Then it comes down here, shoots up like a rocket, right? But notice, really focus on this now. Okay, so there's obviously, this is all demand. Notice every time price comes back there, it shoots up. Here's a huge move up. But notice when all this demand in this area is finally taken out by this drop here, see that big drop? This decline takes out all this demand, which means the equation has flipped, right? So knowing that, where did that happen? Where did that start from? Where's the origin of that? It's right here. Okay, everybody see that? It's right here. Okay. And again, that's where this level comes from. It's an area of supply in the grid. So that's where this level comes from, so that today when prices went into this level, we want to take a short position there. Again, instead of trying to take the breakout and make money in the breakout, the real trade, the low risk, high reward, and high probability, and most importantly, very predictable opportunity is to get in on the pullback here. Jake, most of the time, you know, but not always, right? So there's nothing wrong with rally-based drop, drop-based rally in the appropriate area. Yes, so again, it's hopefully you heard all that. It was this decline here from the 75 area down to the 35.10 that, you know, where the flip happened. The origin of that flip was right here, which is, you know, that's our level. Okay? This is not rocket science. This is not some heavy-duty analysis. It's just following simple rules. It's a simple rule-based strategy. You know, and that's it. Okay? When you say lower level, let's see, 35.60, where would that be? Would that be in here? Is that what you're saying? We would not, structure-wise, this would not qualify as a supply level here. Right? Okay. Anyway. We do have a little bit of demand in here. And again, if you look down here, drop, base, rally, there's nothing wrong with drop, base, rally, and then you buy the first pullback. It's very similar, right? Okay, so same thing. We've got an imbalance here. Notice the breakout to the upside happens. Instead of buying the initial breakout, which is high risk, low reward, and low probability, we buy the first pullback, which is low risk, high reward, and high probability. If I said all that right. Make sense? There's a reason why you don't see breakout traders, conventional breakout traders, making a low risk, high reward return year after year after year. Okay. Chasing price, in any type of market speculating just doesn't work. And I'll tell you the other thing that's wrong, and I've seen it for years with just focusing on conventional, breakout trading. What happens is, and let's look at this one down here. And then next we're just going to go to, we're going to identify some going forward. This happens to so many conventional breakout traders, and it's what makes you crazy. Anyway, so let's say you do the conventional way and you prices break out here and you buy this. Where are you going to get filled? I mean, when do you actually buy it? Because here's a bunch of other breakouts, right? So, I mean, when do you actually get it? So maybe you get it up here a little bit, maybe 35.20 or so. Okay. Anyway, when you buy on this breakout, you're never going to get a good fill because you're buying while prices are going up, right? But secondly, what's worse is, where is the breakout trader in this trade? If they bought in here somewhere, I'll put a circle in there. Here's the other problem. Let's say the breakout trader gets in somewhere here. Where's that breakout trader going to put their protected sell stop? Where are they going to put their stop? Right? They're going to put their stop, just around, just down here somewhere in the black line, right? So what happens, and I've actually seen it in action in real time, sometimes in trading rooms and stuff. They get in here, they're making a little money, all of a sudden price goes against them. And just as price is coming down to their stop, that's when it hits them. They say, oh no, I put my stop where I should have been getting in the first place. Right? And then they get stopped out, and then price does exactly what they thought it was going to do, which is actually the entry that I'm always preaching to you, right? Okay. So the breakout traders sell stop and buy stop is actually our entry point. Does that make sense? And it's an entry point for a bank and an institution and a market maker. Okay. Now, so how do you predict this stuff in advance? I want to show you something we do in the trading rooms here in the mastermind community and online trading academy. Let me show you one more thing, and then we'll go to some live markets real quick. Let's go back to our trade here that I showed you. Let's talk about, remember the flip? So we've got our demand zone here. Remember, our first pullback here, whoever's selling here is filling some of these leftover buy orders. Whoever's selling here is now filling more of these buy orders that are left over. So the next time price comes down, when you see it basing like this instead of rallying, okay, that's when the chart is telling us, you know what, there's not much demand left over and there's enough supply. We're probably going lower. What we'll do sometimes is instead of getting in on the first pullback, which is our normal supply demand entry, and instead of shorting when prices break out of this area, we'll get in the base. You can get in inside the base. But make sure you see it basing first. Give it a little chance to base, right? Because most of the time, what's going to happen is price is going to break out. But you want to be in before this breakout. You don't want to be entering while price is falling. Does that make sense? But I wouldn't start doing that or try doing that until you've mastered the flip picture. Okay, master the picture of the flip. Jake, I think you named it the flip today, so I think we'll probably just go with that. Okay. Anyway, okay, your stop would be just above the area, Justin, okay. Unless you can think of another name. Yeah, Igor, limit orders as much as you can. Yeah, Alex, once we find the supplier demand level, the breakout tells us then it's a supply or demand level. And we always get in on the first retest. What I'm suggesting today is a few different things. Understanding the flip, and make sure you understand the logic behind the flip. This is not just something you said, hey, we've tested this and looked for this picture for 2 years. It has nothing to do with it. It's just orders, buy orders and sell orders. That's what this is all about. Okay. Right. Yeah, Billy. Yeah, no, that one's not. That one might not be 3-to-1, and it doesn't have to be. It's whatever you want it to be. Okay. So again, and the other thing I'm suggesting here is once you see, the supply-demand equation not out of balance anymore on the demand side here, but now becoming more equal, and in fact, heavy on the supply side, it means basing here instead of rallying like it did before. Okay. Most of the time, price is going to break to the downside here, so we can get in the base, but get in before the breakdown. Get in the base with your stop, above the base. It's a different type of entry, and I wouldn't just start doing it. Make sure you get it, and we can go over it. So I wanted to introduce those two things to you here. And let me bring this chart back. So let's go to another market. Maybe I guess we can look at the euro or something. Why don't we do that? We don't have a lot of time left, but let's take a look at the euro. Billy, no, I would absolutely not use an indicator, because an indicator, and you'll never see indicators on my charts because indicators just lag price, which means they're just going to increase risk and decrease reward. All right. So let's blow this one up. This one's already met entry, but we're okay with another entry here. So we've got a couple. Here's another one. Look at this one, right? Here's a supply level up here, but notice the difference between that one and that one. Okay. Again, here's some demand. Here's the first pullback. Now it's not out of balance anymore. We break down through the level. That's why this level worked out so well. Now the fact that price just touched 136.50 and fell means we'd be comfortable taking another short position at this area. And no, I see someone saying talking about small time frames. We do this on volume charts too for the higher frequency trading. Okay. Right, we'll go over again. We'll go over that in the very near future as well. And anyway, it's a very important concept. Yeah, let's go to a small time frame. Let's see if we have anything setting up here. We're probably not going to because we'll set up some big time frames. Yeah, nothing right here in the euro. Switch the chart here. There we go. Oh, before I forget though, let's take a look at the dollar. All right, remember our level here? Remember how much we love this level? Okay. Again, this is the origin of the price going through this level. So here's our demand. First pullback, second pullback. Now here's where price went through the level. This is like the same picture of the market we just looked at. Yeah, 3 to 6 candles, Abby, is really what we're looking for. So again, so here's the move that takes price down through that demand, which means the flip has happened. Here's the origin of that flip, and that worked out pretty well for us. Now price is headed back up to that area. So again, the 81.50 mark still looks great. It looks really good, and that's for the dollar. Really any time frame, because you have to kind of keep them relative. Here's the pound. Again, notice all these pullbacks eating up the demand. Here's when price goes through the demand. Then we want to enter on the first pullback to that level. Okay. Not a whole lot to do on the pound, at least not in this time frame. It's a very small time frame. Not a whole lot right there. There wasn't, before starting the webinar, there wasn't a whole lot to do. There's some nice setups in crude oil and gold. In fact, in CL, let me pull this up real quick. Now this one's pretty low on the curve, but it looks good. It's going in the wrong direction. We need a little bit of a rally. Actually, it took me a few minutes to get it on the chart, but let me just take you to the grid. We go to the grid and let's go to today, and we cruise over to CL. It's 93.45 to 80. Watch that one. No fundamentals. I'm glad you asked that question, Boyke. Question is, do you watch fundamentals? No, absolutely not, because what we care about if we did watch fundamentals, what we would care about most is, the whole point in analyzing the fundamentals is, what's the end goal of that? What's the purpose of doing that? The purpose of doing that is to figure out where price is going to go. So instead of focusing on the fundamentals to figure out where price is going to go, why not just skip all that and just go right to where is price going to go? You know what I mean? So any and all influences on price that are possible through fundamentals and opinions and perceptions, all of that stuff is any and all of those influences on price are already reflected in price. We can see that by analyzing where the willing buyers are and where the willing sellers are, which means we can skip that whole fundamental process. Jake, you just said in one sentence what I've been trying to explain for years, so thanks for that. I'm going to have to steal that from you. But yeah, as Jake says, where the orders are is the most fundamental thing. Okay. Next time you should give this webinar. You put it in more simple terms. Anyway, thanks for that. So I see we're out of time here, but I put my email address in there in the chat. Let me just do that again here so you have it. And hopefully that was helpful. I really wanted to make that point clear. I don't know if I did a great job. I tried to, but it's an important point, and we will see you next time. Have a great day, everybody.